$57 billion. That is a single quarter revenue Nvidia just delivered. If this were a traditional company, its cash flow would already rival entire nations. But strangely, on the night the earnings were released, Twitter wasn't celebrating. Instead, a terrifying story is spreading like wildfire across Wall Street. They said hidden within these $57 billion are $33.4 billion in IOUs that will never be collected. They say this is a $600 billion Ponzi scheme. They say Nvidia isn't the next miracle, but the next Enron. Is Nvidia really cooking the books? Today, no hype, no hate. I spent 2 days in this weekend dissecting Nvidia's latest 10Q filings and every short report on Twitter like a forensic accountant. I found that the bears got one thing right, but they also made some basic errors. The truth might send shivers down your spine. Buckle up, let's start the audit. First, let's look at the source of this panic. This is a post going viral on X. The user Financial Lancelot claims accounts receivable spiked 50% in 2 quarters. This is classic channel stuffing. This is exactly how Cisco died. Look at this chart. Ideally read. This is Nvidia's accounts receivable. It skyrocketed from a few billion last year to a massive $33.4 billion now. What is accounts receivable? Simply put, it means goods sold but cash not yet received. The short sale logic is brutal. If H100 chips are truly as hard to get as Jensen Huang claims, customers should be lining up with cash at the door. Why is Nvidia allowing customers to owe so much money right now? Is it just because the chips aren't actually selling, so they have to force feed them to distributors, creating fake accounts to maintain the illusion of high growth? But that's not even the scariest part. Here is the more advanced allegation, round tripping. The bears describe a perfect financial loop. Step 1. Nvidia invests money into startups like OpenAI and CoreWeave. Step 2. These companies take that money and turn around to buy Nvidia's GPUs. Step 3. The money returns to Nvidia's pocket, turning into fake revenue. Someone on X even did the math, claiming the amount involved is as high as $610 billion. If true, this would be the largest left pocket to right pocket game in modern financial history. But there's a third signal. Look here. Inventory. Nvidia has $19.8 billion worth of goods sitting in its warehouse, more than double from last year. Goods not selling, money not collecting, and these 3 signals together. And does it feel like Nvidia is about to implode tomorrow? Alright, ghost story over. Now, let's let the data speak. I recalculated Nvidia's key financial metrics, and the results are very interesting. First, about those $33.4 billion in IOUs. To justify if AR is toxic, you can't look at the absolute number. Because business is growing, debts naturally grow. You have to look at DSO, Days Sales Outstanding. Look at this green line. If it were channel stuffing, this line should fly above 90 days or even 120 days, the red zone. But in reality, 53 days. It's even 1 day less than the previous quarter. This means Nvidia collects its cash in less than 2 months on average. In the semiconductor industry, this collection speed is first-tier performance. Conclusion 1. The AR allegation is busted. It's not bad debt. Business is just booming. Now let's look at the $610 billion round-tripping rumor. This is purely bad math. That $6 and $10 billion is the total valuation of those startups, not Nvidia's investment. The fact is, companies like CoreWeave, seen as shares, have a total annual revenue of maybe $1 billion or so. Nvidia's revenue in a single quarter is $57 billion. Even if CoreWeave spent every single penny on GPUs, it will count for less than 3% of Nvidia's revenue. To fake this kind of terrifying growth curve with 3%? Jensen Huang will need to hide 100 CoreWeaves in his basement. Finally, let's explain the $19.8 billion inventory. Many think these are unsold old GPUs. Wrong. Look at the blue line here. Purchase commitments represent $50.3 billion. What does this mean? It means Nvidia isn't worried about selling chips. It actually owes TSMC $50 billion to secure capacity. What's piling up in the warehouse are raw materials to produce the next generation Blackwell chips. This is a signal of shortage, not stagnation. So, is Nvidia flawless and safe to go all in? Totally wrong. Although they aren't cooking the books, I dug up a structural crisis in the report that is scarier than fraud. Forget the conspiracies. This is the number you should be staring at. 39%. Out of Nvidia's $57 billion quarterly revenue, nearly 40% comes from just two companies, customer A and customer B, likely Microsoft and Meta. The top 6 customers probably bought 80% of the chips. What does this mean? It means Nvidia's fate isn't in Jensen Huang's hands. It's in the hands of Microsoft and Meta. The current AI boom is an infrastructure arms race between giants. Imagine if next year Microsoft realized they spent $100 billion on AI but made no profit? What if Wall Street starts punishing these tech giants for burning cash? The moment these two companies decide, we need to save more money, let's cut Capex by 20%, Nvidia's revenue would collapse instantly. This isn't fraud. This is a customer concentration risk. This is a real sword of Damocles hanging over Nvidia's head. To summarize today's investigation, first, the fraud rumors and next are mostly baseless. Nvidia's financials are healthier than most companies. DSO is only 53 days. Cash flow is strong. Secondly, the inventory spike is to prepare for Blackwell, which is bullish, not bearish. Thirdly, however, extreme customer concentration is a very real risk. So, if you hold Nvidia, don't stare at those boring conspiracy threads. What you need to watch are the earnings reports of Microsoft, Meta, and Google. Specifically the Capex guidance. As long as they keep burning cash, the music won't stop. But once they start saving, it's time for us to leave. I'm Professor He. I look at data, not rumors. If this video saved you the time of reading a 48-page financial report, please like and share. It means a lot to me. See you next time.